tell, and I think I'm in shot. I think you can never tell with this camera.
Yep,
Otherwise, it'll be a disembodied voice. So
no,
you got me right. Okay, great. Good. So, good afternoon, everyone. I assume most of you in the afternoon. A few of you online might be still in the morning. My name is Bernard Schneider. I'm the head of the Institute of Tax Law, and it is my and our pleasure and privilege today to have Anne Fairpo come to speak to us about tax information. Anne is a barrister. We had the pleasure, we used to have the pleasure of having her as a visiting lecturer here at CCLS, and she is now a judge on the Tax Tribunal with a long-standing interest in tax and technology, taxation of technology, and so on, which is both an extremely important specialism, increasingly so, and not a widely held one. So we are particularly fortunate that Anne has come back to discuss this area with us today. So on that note, I will
thank you.
Hand over the floor.
Thanks. I have to preface this by saying that I am not speaking in my capacity as a judge. This is me as an independent researcher with an interest in tax technology. None of what I say can or should be attributed to the First-tier Tribunal, Tax Chamber, any other chamber of the First-tier Tribunal, or the Ministry of Justice, or anybody else. You'll appreciate I'm actually required to say all of that. But the point of this talk this afternoon, this morning, wherever you happen to be at any given point in time, is really to talk about the future and tax policy and how tax policy may react to that. And some of what I'm talking about is beginning to happen right now, but this is very much a sort of future thinking and where things may go and how tax and other forms of economic policy may need to respond. Because the point being that automation has potentially some profound implications for the tax receipts of certainly most westernized type countries, and eventually pretty much any country at this point in time or in future in this sort of sense, because of the capacity for automation to replace labor. Now, most governments, certainly most, as I say, westernized type governments, depend very heavily on taxation from labor, from the workforce, from employment, for their tax take. To give you the UK's statistics, these are statistics for the 2021-22 tax year in the UK. PAYE income tax, that is strictly income tax from employment, not from self-employment or dividends or anything else, so just from employment, and social security contributions, so national insurance contributions, amounted to 48% of the UK's tax take. In specific numbers, PAYE was responsible for £188 billion of receipts. National insurance, £156 billion of receipts. Total tax receipts for 21-22 were £718 billion. If you're wondering where I'm getting these figures from, it's HMRC's statistics page. Just Google it, you'll find it. By comparison, capital gains tax raised £15 billion and corporation tax raised £64 billion. So you can see that if the result of automation is the translation or the reduction of income for the government from employment, whilst there might potentially be an increase in take from either businesses or those who own businesses, the relative figures mean there'd have to be a very, very large swing. And as I'll go on to talk about, in many countries, taxation is geared towards labour and employment and away from capital and from companies in this sort of context. And also what we've seen over the last couple of decades, at least, and probably for rather longer, has been an increase in the growth of capital wealth rather than growth of income. So people are getting richer, but they're getting richer from the growth in value of assets. To be fair, and to caveat that, I should add that about 2/3 of that has been the growth in value of real estate rather than other assets. But it's nevertheless, even if you look at sort of business related assets, business capital, it is growing at a considerably faster rate than income, whether for individuals or for companies in this sort of context. And so when you take all of those together, there is this sort of potential for a perfect storm kind of idea. But to row back a bit, why automation? Why am I worrying about automation? Why am I suggesting that governments should worry about automation? Technology, what's it actually good for? The point being, if you look at how technology is increasingly used, it is replacing people. This is not a new story, and the next slide, I'll come on to why it's not new and why there has been sort of discussions, but there are, I think, some particular factors happening at the moment that make that more difficult. But the thing with technology is it does displace human beings. In the past, we have managed to catch up with that one way or another, but generally speaking, it displaces it. To bring something completely up to the minute, anybody in the UK who's watching this will have been aware of the rail strikes that are going on as we speak. Well, maybe not as we speak today, it's not actually a rail strike, just mass disruption on the railways because of yesterday's rail strike and tomorrow's rail strike. One of the things that the strike is about is the potential reduction in labour or requirements for labour by the rail network in the UK as a result of modernisation, or more accurately, automation. Some areas that they're looking at, there are teams of people, so multiple individuals working for the rail system at the moment who would be replaced by one individual and some technology. One of the areas in particular that's being suggested on this one is looking at the state of the physical network, so the rails themselves, overhead lines, etc. Right now, if the government does own the railway system one way or another at this point, given how much of it is effectively funded by government. If Network Rail wants to check the state of track, the state of overhead lines, they send out a team of individuals, usually quite a lot of them, who will go out and they physically look at each piece of track, each piece of overhead line, and all the rest of it. Part of the suggestion now in what they want to bring in is the use of drones. So you have one individual who will basically monitor the feedback from the drone that goes out, and effectively you can direct it to look at what you need to. You need to get a closer look, you look at something. Yes, there's obvious labour savings, which is one of their areas. It actually has another one, which is if you send out a team of people to look at a section of railway track, you have to stop trains running on that railway track because trains and human beings meeting at speed is a bad thing. It generally does not work well. Whereas if you send out a drone, it can dip down to look at something it needs to when you know there's a train coming and move away. If the operator gets it wrong, you've got a squashed drone, but that's not a squashed human being, etc. So there's those sort of elements to it, and actually that illustrates quite neatly one of the problems, if you like, for thinking about technology, which is on the one side you've got, yes, this displaces labour, there are people losing their jobs, that's really bad. On the other side you've got, yeah, but actually it vastly reduces the potential for somebody to get badly hurt doing their job. And there are other areas of technology where there is a similar flip side one way or another. So, for example, in the medical field, we're starting to see robotic surgery, and have been for a number of years now, actually. And it's beginning to get to the point, it's primarily still not displacing labour to any great extent, because what tends to happen with robotic surgery is the robot is actually controlled by a surgeon. But it's not that far away from the point where actually there's going to be a certain number of types of operation and things where you can just program the thing and it goes off. It's got enough AI, artificial intelligence, in the whole system to be able to actually operate properly. Now, yes, that's potentially displacing the surgeon, might not be just yet, but in future. The key point, though, from the plus side is you've got a surgeon that does not fall asleep, did not have a row with somebody, and therefore there's possibly concentration. I appreciate I'm extrapolating. I've never heard of a surgeon doing that, but I slightly go with they're human beings. Essentially you're replacing a fallible human being, and we are all fallible, like it or not, in some format or another, with something that is potentially fallible, but that depends on its programming. Programmed correctly, it won't have trembling hands. It won't have that sort of lapse of concentration that everybody may have at some point or another. And you can see why that might actually work. You could also probably, almost definitely, work at a scale that isn't possible for human beings. You know, like it or not, fingers have only so much dexterity in this sort of context. So I'm just saying, is the sound still bad for those watching online? Because there's a couple of comments that are coming through. Okay, I'll try and speak more loudly. If it continues to be really bad, let me know, and apologise if I deafen the people in the lecture theatre. So it's that point that we've got, this is not always, okay, somebody says we've got sound issues on, okay, fine, right. So it's that thing, it's very easy to say technology is really bad, we should just stop it. No more no increase in the level of technology. It's bad enough already, point on, for an extent. But it actually has the capacity to make people's lives less bad, possibly even make them better. But certainly, if you're doing some sort of work where there is a high potential that you will get hurt badly, or that you could do something that would be catastrophic for somebody else, then actually reducing those risks is actually, generally speaking, quite good. You also, just at the less catastrophic end, can reduce boredom. Some of the AI that's being looked at in software at the moment, and it's actually being used, is being used for doing things like audits, checking through, auditing businesses and so on. Believe me, as somebody who has actually suffered through an audit as a trainee, there is nothing glamorous about doing audits. There's really nothing glamorous about doing an audit when your client has all of its stock in freezers, and you go in, parka jackets done up to the nines, writing in pencil, because if you take an ink pen in, it will freeze. Trust me, I'd have been very happy to have been sort of given a drone and said, you can fly this drone into the freezer, or even we have technology in the freezer that means you don't actually have to go in and check it, that sort of thing. There are other areas like the increasing use of automation in warehouses. You've probably all seen the press coverage about working conditions within sort of major retailers, warehousing and so on. There have been quite a lot of criticisms about the amount of work that people are expected to get through, the temperature conditions, etc., and so on that they're dealing with. Replace that with a robot, and the robot can work in the dark. It can work in very high temperatures, certainly higher than anything human beings can deal with. It'll work in temperatures that are considerably lower than it. Frankly, we can have a robot trundling around on Mars. Most warehouses in the UK and other jurisdictions are not actually quite as inhospitable as the surface of Mars, as far as I'm aware. Some people may disagree with me. Anyway, it's all of that. And there are businesses doing that as well. Ocado is one of the classics. If you go Google this, it's plenty of media on it. A number of their warehouses work on a dark basis. That is, picking and so on is all done by robots. They have, as the pictures I've seen, there's a grid system that the robots move around on. They work out the most efficient way to pick a particular order, get material, and just zoom around. It doesn't require a human being. They can keep the warehouses cool, which for fresh produce is quite useful. And all of that, again, reduces work that isn't particularly pleasant for people to do. The flip side, though, is the one I'll come on to, which is, well, what do those people then go and do, and how do they make a living? That's putting to one side the cost of living issues we've got at the moment. So that's really what I'm getting at. Is right now we've got technology that is perfectly capable of replacing quite a lot of people's work. It isn't doing so yet to a massive extent because of the cost of investment. Putting a robot network into a warehouse costs money, and until recently, getting people to work has not cost a great deal of money, and in some countries still doesn't necessarily. The UK seems to be getting to a slightly bizarre point, at least for those of us whose memories go back 30, 40 years of, what do you mean there are more jobs than there are people looking for jobs? That doesn't happen. But it now is happening, and so on. So there's that may slow things up a little bit. Capitalism will make a profit at more or less any cost, thank you very much. But the markets still quite like their returns to come in very, very quickly, thank you. And investing a lot of money in something tends to depress your profits for a little while. And so there is a bit of a issues here, issues there, and so on. So it's balancing. But overall, I suspect that what's actually going to happen is automation will increasingly replace labour. It has in the past. There's no particularly good reason why it won't at the moment. Issues globally mean that it may take a little longer than we perhaps thought would happen. But I think it is coming along, and that's why we need to look at it. I did mention earlier that this isn't new. What we're in at the moment is described as the fourth industrial revolution. the use of automation here. The first industrial revolution occurred in the late 1700s, related to the use of steam, which actually replaced huge amounts of people in work, or as it eventually happened, in fact, just found alternative employment for a lot of people in that it made it easier for more things to be produced, but people still needed to run steam machinery, particularly things like textiles and so on, where it became very much easier to produce textiles, very much cheaper. Steam also powered other forms of machinery, etc. as well. Second industrial revolution came along about 100 years later, late 1800s, in that context, and was primarily around the use of transport, trains in particular, and the introduction of the telegraph, and a certain amount of electrification also improved matters. You could work later because it was cheaper and safer to light workplaces. When you're relying on open fires, and by that I include gas, you can see the problems that arise. You replace it with an electric bulb, people can work later without you having to worry about whether or not they're going to burn to a crisp. If the place goes up in flames, etc. So you've got those sorts of things. The late 1800s, by the way, also, it was one of the points where you start to see the interaction of tax and technology. It's one of my favourite cases. 1881, a case called Erickson and Last. You know, if you think this is, well, technology and tax is new, this case will tell you it's not. The question that arose was who has taxing rights to do with a particular technological transaction. It's actually the introduction of the telegraph, and a company that had operations in the UK, Denmark, Russia, etc. And messages were passed from the UK through Denmark to Russia, if I remember this correctly. Certainly use those three countries in there somewhere with Copenhagen. And the question was who has taxing rights over contracts and who has taxing rights over the income from the messages, etc. Is that the UK? Is it Denmark? Might it be Russia as the other end, etc.? To a certain extent, the answer doesn't really matter because international tax at that point was a figment of most people's imagination. But it is that point where you start thinking, wait, hang on, all of this issue around double Irish Dutch sandwiches and Google and things, we just go, no, this all started a long time ago. It's not new. So that was, anyway, first, let's say late 1700s, second late 1800s, the third industrial revolution was the late 1900s, very late 1900s, and started was the sort of use of the internet for communication and the ability for businesses to integrate very much more closely than they previously had done. Again, another example I really like is Unilever. Unilever very helpfully have a massive archive of all of their annual reports going back to at least the I think they actually go back to the 1950s. I think they get a bit sporadic before the 1970s. And if you look at those, they're a really good example of how a conglomerate, multinational conglomerate, has evolved over time. If you look at their annual reports, their accounts and so on from the 1970s, they still operate on a siloed basis, country by country by country. And I don't mean that as a reporting matter. What I mean is in each country you have manufacturing, in each country you have sales and marketing, and in each country you have customers. There's very little that happens cross-border, other than in a few locations where the borders are actually quite close to each other, and so a certain amount of centralisation might have helped. But even then, not as much as you'd think. Fast forward to the end of the 20th century, and yeah, they are a lot more decentralised. Much more happens cross-border, marketing happens cross-border. You actually start to see this even in consumer. I'm now trying to remember if this is Unilever, but I can't remember precisely. One example of the internationalisation of marketing is, for those of you that actually go and poke around cleaning fluids in supermarkets, there is a brand called CIF, C-I-F. It's actually a European-wide brand, possibly even beyond Europe. The UK used to be called JIF, J-I-F. They actually changed their name to enable cross-border marketing, manufacturing, etc. to actually happen more easily. It's also why marathon bars are now called Snickers. Just marathons are such a better name. Anyhow, but that's my point, is Unilever moved from the 1970s to the late 20th century and shifted dramatically the way it did business because of the internet. And certainly the last 20 years of the 20th century, it reinforced that dramatically. We went from, if you needed to get a message from your London office to your Paris office, you either picked up the phone, which is fine, but you don't then have it in writing, or you typed it out on a telex machine, and go Google it. I'm not going to explain telexes. Faxes came along after that. But all of those, emails a lot quicker and a lot easier, not least because you can actually automate the receipt of the email. And from there, you move swiftly onto the, never mind the clunky email bit, just send the instructions directly. So you've got all of that going on in the late 20th century. Fourth industrial revolution is pretty much starting now, has been starting for the last couple of years, I suppose. The last piece is the use of artificial intelligence that's building on all of that before. And that timeline tells you what the problem is right now. Late 1700s, late 1800s, late 1900s, 20 years later. We haven't got that 100-year gap that we've had between previous industrial revolutions for the technology to bed in, for those who lose their jobs, to find other jobs, for other jobs to be created. And there is a slight question that actually, with the increasing use of artificial intelligence, where are those other jobs going to come from? Because actually you get the AI right, things like maintenance of machines, you entrust that to another machine. And you carry on through that. You need fewer and fewer human beings. There are probably still going to be some things that need human beings. Until last Saturday, I'd have probably said entertainment. But last Saturday, I went to see the ABBA Voyage concert that's out at the ABBA Arena in Stratford. Yes, I am that age, I am that demographic. I actually went because I was interested in technology. I happen to not dislike ABBA, but believe me, there were some very much bigger fans there. Technology is stunning, and after the first about 30 seconds, you forget that you're actually looking at a screen. I mean, okay, then you look at the blown up bits and you go, oh yeah, that's CGI. Because with the best one in the world, they still haven't got facial movement quite right. And I don't know how much of that is because they haven't got it right or because they deliberately kept it a slightly lower key so that you don't get confused. I don't know how many of you have seen the reports in the last week or so of the Google engineer who, has he resigned, been sacked, and whatever, there's some issue going on because he believes that the AI has actually become sentient, that Google is working on. You know, there are reasons why you might want people not to get confused by what they're looking at. So as I say, this is a major arena, but actually the main screen bit, you're looking at thinking, I cannot for the life of me work out when staging stops and the screen starts. Partly that's the integration of the lights and things like that, but it did make me rethink my point about, okay, maybe entertainment doesn't require human beings. Probably requires some human beings at the moment to do the original thinking, but anyway, we'll see how all of that runs. There are obviously problems handing over everything to machines, but one of those problems handing over to machines is what are the rest of us going to do? We're going to what, sit here and be entertained by the machines? Those of you who've seen WALL-E will slightly also know where the problems with that might lead in that sort of general sort of handing over of everything. But one of the real problems that arises with all of this is how do you pay for the human beings to live if their means of actually getting money to live have declined? Because if the machine's taking your job, where are you getting your money from? Now, as most, certainly westernized and I think other countries increasingly now go, the answer to where you get your money from is the state. The state being, and this point gets, I think, forgotten at times, the actual collective of the individuals in a democracy. You know, government is us, we are the government. They happen to be theoretically representing us, but in the end, that is the choice that people make as to what they want and how they want it. And so it's effectively that question of, you know, we make choices about how we pay ourselves. And one of the choices that I think we're going to have to face is how do we pay ourselves? Does government actually ensure that everybody has enough money to live a rational life in this context? And where do they get the money from to do that? And the short and boring answer is most of the time tax. That is generally speaking the answer that comes through. It's not the only answer, but this lecture is focusing on the tax side and not the sort of general economics side. If you do go back to the late 1700s or so, or early 1700s, that's when the UK started to introduce tax, and it was still fairly limited at that point. But the way the government had previously, and by government I tend to mean the Crown, had generally raised funds for things like going to war with other people, which let's face it was what primarily the government needed money for. It's actually why taxation started. It was actually funded through land rents. The government, or the Crown, owned substantial estate, rented property out to other people, got money in that way, which funded things. There are certainly economic arguments for saying tax is not necessarily the right answer. Maybe the way to do things is that collectively we own everything and then everybody gets a share in that and distributions from that. Or alternatively, actually, we do away with money altogether. Go with Star Trek thing. I mean, I know they have this sort of credits idea, but if you actually watch Star Trek most of the time, money is an irrelevancy. What you need is provided for you, and you just sort of get on with living your best life, which appears to involve going and having arguments with the Klingons and then becoming friendly with them, and I have no idea what happened after that. I've lost track of the number of spin-offs of Star Trek that there have been. So, if that sort of, eventually we may get to a post-money, a post-want, post-need society. We are definitely not there, and we are heading very rapidly to a need society before we're going to get to a post-need society, as far as I can tell from use of automation. So the tax bit of this talk is really what are the options that are available to government? Because if you look at the UK, as I say, 48% of our tax take comes from employment. I'm not saying it's going to go to zero, but it's quite possibly going to go substantially lower if we start to lose things like the audit work. That's the things that head into professional work. And it's not just the stock takes that will be replaced by AI, but sooner or later you just do everything on the accounts, plug it into a machine, and that will work out whether or not, never mind the true and fair view, it'll actually just work out the actual whatever's going on. And we've already seen the use of technology in other areas. So lawyers, you might think that lawyers are always going to be needed. There is software that will do the number crunching for due diligence on transactions, which is traditionally the grunt work for quite a lot of baby lawyers, certainly in the cities, the grunt work for baby lawyers. We are starting to see self-writing contracts. Some of the work that goes on smart contracts on the blockchain is self-creating contracts. When you get to that sort of level, there are fewer and fewer roles for lawyers. There have already been trials of replacing judges with software. Thankfully, those haven't worked as well as they might do. There's a study in Canada, and the reason they don't work isn't the one you might think. There's a study in Canada that actually ran a series of facts and things through databases, through a piece of software, and compared the results to by hand to case databases and so on. And they found in the end that the AI software was right for a given value of right, given this was an assessment being made by a human about laws, which are inherently not always as clear-cut as they might be, otherwise you wouldn't actually need a judge. So the software was right about 85%, the human beings who they were running some control right about, I think it was something like 79% of the time, so it was close, but not as close as it could have been. The problem with the software is it can't tell you why it's come to the conclusion that it has done. So far, nobody's actually managed to produce AI that actually produces a reasoned decision. And law, at least in the sense of civil law, common law, etc., all pretty much works on the basis of if somebody tells you you can't do that in law, they need to tell you why you can't do that so that you can then appeal it if you don't like the decision, and so on. So until we can produce AI that can not only come up with a result, but can actually tell you why it's come up with that result, then the judges are safe. And also, I suspect it's going to be a while before we get robot advocates. But that is looking at a very peculiarly British advocacy type system. If you look at the European Court of Justice, they rely much less on oral advocacy than the UK does, or common law systems such as the UK. It's all about the written advocacy. And if it's about the written advocacy, you can probably replace that with AI in less time than you can replace oral advocacy with AI. So it's not, this is the problem, is we're looking at professional areas. We're looking at losing a wide swathe of jobs. I'm not saying that it was fine earlier because we were just losing manufacturing jobs. Any jobs lost is somebody's life changed and affected and so on. But like it or not, people tend to pay more attention when it starts to go through swathes and it starts to affect the classes that they might aspire to join. And that sort of thing. And also, just frankly, the more people we have losing the jobs, the more demand there is on state and the more strain, and we're back to taxing. So what are our taxing options, policy ideas and so on? One of the things that comes up sort of fairly regularly as well, okay, so the point is capital and capital investment and all the rest of it. Do we look at, not imposing taxes? Or one option is, do we impose taxes on robots? Bill Gates is quite a fan of that one, by the way. Very keen on the idea that we should tax robots. Slight problem is, how do you define a robot? Does that include artificial intelligence software? If so, where are the limits? It's fine when you're looking at a machine. This, by the way, is in fact an Ocado warehouse, the photograph that you're looking at on this slide. You can see the bit that says Ocado on it. So this is the supermarket thing I was talking about there. And it's fine if you're looking at discrete machines, well, sort of fine. You can treat them as if they're a quasi-employee and require businesses to pay tax as if, or pay a form of tax on those, but it's not ideal in this sort of context. And so essentially one of the sort of suggestions that's come up through this is, right now, if you are a company or an employer and you spend a significant amount of money on capital assets, you'll generally get a tax deduction for that. Now, when you get that tax deduction, how quickly it'll arrive varies between countries, but most of the time it's not that short, it's not that long term. If you look at things like the UK's annual investment allowance, that has bubbled up and down and around like a yo-yo over the years. But it can, for smaller businesses, mean quite a considerable immediate payback in the form of tax deductions. For larger businesses with more significant and established capital projects, it takes longer, but ultimately you are looking at, you spend £1 million on a machine, you'll probably save that in tax. Never mind the savings you then make on your employees as well. You'll save it quite quickly in tax. And so there is no disincentive, or there is limited disincentive. I did mention earlier that the capital markets are a little bit different, and the very big listed companies and so on looking for smooth payments and smooth earnings reportings because they don't want to spook the markets. That's a little bit different and it takes longer to be able to do that sort of capital investment because you want to make sure that your earnings levels stay similar. But anyway, as I say, one of the things is looking at this as well, in this form, do we say that automation tax is a reduction in deductions for capital expenditure, or other ones that looking at this to try and work out whether you effectively say, well, not only do we remove capital deductions, but we actually go further and make a specific disincentive in this context, and that will be capital taxation. So actually, in this context, rather than giving a deduction for expenditure on capital, here you'd be looking at taxing increases in capital growth in businesses. You probably, if you're going to get any buy-in on this, you'd almost certainly have to try and find some way of ring-fencing it or approximating the growth in capital value that relates to automation rather than any growth in capital value, not least because probably you'd end up with large numbers of shrieks and complaints if you tax the growth in value of real estate, since it appears to be the one unstoppable thing on this planet is that land becomes more and more valuable as time goes on, because they're not making any more of it. And frankly, as the climate change continues, it would appear we're actually making less, and we're actually removing that which exists via rising water levels, but other issues go through there. And so that's, we've got those two flip sides of capital and forms of dealing with the tax relationship to capital. Do we encourage capital investment? Do we discourage it? Do we actively discourage by then taxing capital growth on top of that? I have to say, taxing capital growth is probably one of the least likely options because of the sheer difficulty of working out how much is to do with automation, and frankly, sort of blanket value would be, blanket taxation would be rather difficult. It's not actually very easy to value businesses. Those of you who've been looking at international taxes, you'll be aware that we've had this rumbling ongoing BEPS project from the OECD. A large chunk of that was to do with how do you value intangibles, which, by the way, are things like artificial intelligence software and the kind of things that lead to the automation that causes problems. So we've got massive international thing of how do we go about valuing these things? Seems fairly unlikely, and that hasn't stopped, by the way, never mind pillar 1, pillar 2. We are still in the how on earth do you value this stuff. you're not going to get very far from that to, oh, well, we'll tax on the basis of value of businesses, if you're also at the same time going, we don't know how to value this. So as I say, I think that one, in that format, I think is going to be difficult to actually deal with. I suspect where we might end up is something along these sorts of lines, possibly. Pagodian taxes. It's a name I've always really liked. It's an economist, Arthur Pagel, this is all named after. Basically, this is a tax that's intended to deal with the consequences of an action. The classic one is tobacco taxes that get, very rarely actually get ring fenced, but you get told that the point of it is to pay for the costs to socialized health services of people smoking, which it has, I think, now been thoroughly proven, does tend to lead to adverse health consequences in those who smoke and in those on the receiving end of the smoke in this sort of context. So, so you've got that one as the classic, you know, and it's pretty widespread. Does not actually appear to have stopped people smoking just yet, but has certainly reduced it quite substantially over decades. The other ones you get are carbon taxes, which there's a certain amount of question as to how effective those really are in this sort of context. Alcohol taxes also going through there. Fuel taxes to a certain extent. I mean, it's all very questionable whether fuel taxes are environmentally or are intended to improve the environment, whether they are intended to help bolster the tax take that then pays for things like the roads that get damaged by people driving on them, all of that kind of thing. Tobacco is the one where there is quite a clear cut. I think the World Health Organization has estimated it's something like a 7% reduction in consumption is directly related to taxation. There has obviously been a greater reduction in tobacco consumption globally, but some of that is to do with people realizing that it really doesn't do your lungs any good. All the rest of you come to that. And it's less, therefore, they give up smoking, not so much because it's costing them more, but because it's costing them in a health context rather than a financial context. And so that's the idea behind potentially a Pagodian tax to do with automation. One of the things that would need to be done is to actually work out exactly what you think, well, the answer, well, you need to work out where you're going, what you're going to tax in order to raise money. The what you need to raise is likely to be what you need for the state to be able to support individuals who can't otherwise find work. But there are a number of possibilities. To a certain extent, the Bill Gates robot tax was actually one of these potentials, in the sense of it was a bit limited, but it was effectively saying you have a robot, you will be subject to tax for having that robot as if it were a person. And some of the proposals that have come up, this is all academic proposals at this point rather than government proposals, have been things like looking at the savings made by a business when it automates and effectively saying, well, actually, you're now making X amount more profit, we will tax that X amount more profit. There is a bit of precedent for that in oil and gas taxes, where if you look at the UK, Australia, a couple of other countries, they have what's known as a ring-fence tax rate, which is a very high tax rate for certain profits from oil and gas, which are intended to be sort of effectively, you're making a lot more money than you should be. This is moving into economic rent, which is my next slide as well, but it's kind of, there's a bit of a grey area between Pagodian taxes and economic rents, depending on how you choose to define what you're taxing. But yeah, so the Pagodian tax would effectively be looking at it and saying, you're reducing your labour by X, you're making more money, therefore we will tax your more money in this sort of context. So you need to raise enough money, though, to work out the displaced labour, and that's going to be an interesting one to actually deal with that. You're potentially supporting displaced labour, people who can't find work at all, potentially funding retraining programmes, which is one of the things that comes up quite often, is this idea of, well, we can solve all of this by making sure people have got, can retrain to do something else that is required. And it's that way of, yes, well, what else is going to be required that isn't capable of being undertaken by an AI-based robot of some description? And that remains an issue. Critics of Pagodian taxes don't like them because, astonishingly enough, they actually stop things happening but that's generally what they're supposed to be doing in some ways, at least with the tobacco. And that's the problem with automation, is because you remember when I started on this, I was talking about the fact that automation, there's not a complete and utter downside. There are reasons for wanting to automate certain things that will improve somebody's quality of life quite substantially, and improve it in a way that makes it good. I'm assuming there's an upside to tobacco. I speak as, I'm afraid I've never actually smoked, so I can't really say that, you know, there's something particularly stunning about the feeling you get of inhaling nicotine or something. So, you know, I'm assuming that there are things about tobacco that people like, otherwise it can't just be explained by addiction. But in that context, that particular Pagodian tax is relatively easy to sort of go, well, it doesn't matter if it reduces consumption because that's what it's supposed to do. Pagodian tax here would be less about stopping innovation and more about raising funds to deal with the consequences of innovation. And there you've got that problem that it might well still stop some innovation, and it might, in the, you know, at least for a while, make people's lives more difficult, some people's lives more difficult than they necessarily would be if they can't find a replacement job that is less perilous than the job that's been displaced by automation. So moving next, then, economic rents that I started to talk about a little bit with, let's say, Pagodian taxes, in my view, sort of blend very slightly into this. The economic rent, though, is a bit more straightforward. Famous last words. It's easy to say, not necessarily easy to define, but the point about economic rent is that surplus profit received for a transaction above average market return is definitely where oil and gas goes. The oil and gas ring-fence trades go. It's effectively the sort of super profits. There have been some discussions about taxing some of the energy companies in the UK on the supposedly high profits that they're making out of the high utility rents and utility costs and so on at the moment. How much of that is media, how much of that is actual, and how much of it is capitalism being capitalism is a very good question in this sort of context. Economic rents historically have tended to come from something where it's activities where you've got a relatively monopolistic position. So oil and gas is very much that, because of the high bars, high cost of entry to, you know, doing oil and gas exploration. You do not get a North Sea oil field, if they still exist. I think a few of them do, by just sort of waking up one morning and deciding that you're going to, you know, drill for oil in the North Sea. It costs quite a lot of money to get there. Anybody working for the oil and gas companies will tell you quite cheerfully that they spend a fortune in actually doing the exploration work, trying to find oil and gas. They actually also, by the way, get quite substantial tax deductions for doing that. So part of the reason why places like the UK and Australia have very high rates of tax on oil and gas profits is because, in fact, quite a lot of the background funding for getting those profits actually came from the government in the first place. And the reason why that funding is encouraged is because the use of fuel is required by economies, by countries at the moment. How enthusiastic governments will be about funding oil and gas exploration over the next few years, given climate change and all the rest of it, is another matter altogether. And economic rents, economic rent, by the way, as the term, is just to do with surplus profits, and hence the tax here. Some economic rents are tolerated. So having a patent generally tends to lead to an economic rent, in that you will usually, if you have a patented product, actually be able to charge more and get more profit from it than from a product that you can't protect because you can stop competitors. So you get the monopoly position. But patents and the economic rent from patents tolerated, partly because they have a short life. For most countries, it's about 20 years. And because it's considered to be an acceptable price that's paid for the benefits to society of people doing the research and development work and so on, and developing these new products. That's how much longer this is going to remain something that wishes to be encouraged, if it's then leading to reductions in employment, is another question altogether in this sort of context. But it remains a possibility for businesses, because you could effectively say, well, business X does this, business Y does exactly the same thing. Business X still uses human beings. Business Y uses some form of automation and consequently has a tenth of the workforce. And then you look at the comparative profits and say, well, business Y is making X amount more profit, we will tax that X amount more profit at rate whatever, and effectively tax that economic rent, that, if you like, or the profit that is earned by automation versus human beings. Easy to say, we're back to the how do you value things, how you know, trying to find comparable. Anybody who's done transfer pricing knows that trying to find comparables becomes quite difficult. So actually being able to sort of balance business X and business Y and say they are the same, and what adjustments do you have to make to be able to see them, etc. All of that becomes quite awkward to do. So it's not a perfect answer, but it's certainly one that's there as a possibility. Now, these last bits have all been around, you know, what are ways of taxing? How do you go about setting tax policies? Which ways do you tax, and so on? That's effectively the point of each of the slides, as being, yes, we're probably going to have to raise some funds from somewhere. How do we go about doing it? And ignoring completely all of the non-tax ways of doing this, which there are many and varied, but there's a limited time I've got to speak in. And that has, just let me get to the, okay, there's supposedly one more, I thought there was one more slide. Okay, it's disappeared. Anyway, right. I'll leave it on that one because it's kind of focused on this one. My last slide, which I possibly did not get around to finishing, or possibly didn't make it through, was the other flip side of tax and automation. To this point, what I've been talking about is how automation could drive down taxes, or tax take for governments by requiring them to, or by limiting the amount of employment taxes that they get, which for most governments is quite high. There is another aspect to taxation and automation, which is the flip side. It's the use of automation by the tax authorities. And this is something we are definitely already beginning to see, and will probably get driven a bit faster than than automation in industry, because government spending priorities are not necessarily the same as those of private companies. How accurately all of this will work is another matter altogether. But one of the areas where you could reduce labour quite substantially by the use of automation is in tax inspections. And there are countries that are starting to do this. The UK government has a system which I think they call Compass, which is supposed to, I make no promises as to whether this actually works. It's been trailed and, you know, we've seen lots of, you know, this is what we are going to be doing, and we've started doing it, but limited amounts of output. How much of that is deliberate because they don't want people to see it, and how much of it is because it's more theory than actual is another matter. The idea behind it is that it's a piece of software that will bring together every single piece of information the government has about a particular individual from all the areas of government. My slight skepticism about it at the moment is that the other areas in a former life where I saw government talking to government didn't work as well as this suggests it's supposed to. I haven't looked at that for the last couple of years, so things may have changed substantially, who knows. Anyway, but the point of it is that it's supposed to bring all of this together and effectively produce a picture, a graphic of a person's economic state and so on. And the idea is that what will get used by the government is that by comparing people who they consider to be in similar circumstances, it'll highlight the outliers. So they'll be able to target people much more closely, where, you know, they'll have a much better idea of somebody's picture doesn't look right in this sort of context, and so let's go and work out why it doesn't look right. They do a certain amount of this already. Anybody who's actually had to submit a UK tax return in the last few years may well have encountered this delightful thing called nudge, where you put in your tax return, and if the figures you have reported don't entirely look like what they might expect of somebody in your circumstance, you will get a message that says something to the one I've had a couple of times, which annoys me completely, is people in your circumstance usually declare more interest than you have done. It's like, great, thanks for telling me I don't have enough savings. And it's like, no, I have actually reported my interest correctly. It's just that I have taken advantage of the actual types of bank accounts that you allow to have without, you know, tax-free interest on, so, and which you then don't actually have to report. So you kind of, it's not necessarily the most well-targeted area of all of this. And also, you know, people can save in ways that doesn't actually lead to interest. Hence, capital growth that we've discussed about, etc. I'm telling you nothing about my particular saving plans. Anyway, but it's that sort of thing where you've got this, a person X in such and such situation, such and such type of work or whatever, living in this part of the country, generally has a picture that looks like that. And if they have a picture that looks like that, then something is a little bit different and a little bit wrong. So there's that element to it. The other areas of automation are just simply getting the information in. The more that government systems can tie into private systems, as they already do by requiring employers to deliver information here. For example, RTI means that the UK has a very low rate of individuals who actually have to deliver tax returns. RTI's real-time information requires employers to report on or before the date of payment of employment to the government as to what has been paid and how much tax has been deducted. And it means you have a relatively precise, not completely precise yet, relatively precise picture of what employees tend to earn. And that could be extended further to other sources of income. It already is for certain types of rental activity. For example, there are some agents who are required to report rental payments to landlords, etc. So all of that automation can pull much more of that. The one area that government, and this is not just the UK, I think it's most governments, has not fully managed to sort out, which stops some automated taxation from taking place, is working out what people's expenditure has been. For employees in the UK, it doesn't matter, because basically if you're an employee in the UK, there are so few things you can deduct for tax purposes that it's, in effect, for the vast majority of the employment sector, PAYE, pay as you earn, through the real-time information system actually tells the government what they need to know to tax you, and so on. But for the self-employed, it's incredibly difficult. You've got no idea what they've spent. AI that takes in information from a bank and analyzes somebody's bank account transactions could actually start to do that if you require people to pay for everything via their bank account rather than by cash. And possibly inadvertently, the COVID pandemic has actually, in this country at least, driven quite a lot of that fewer and fewer places will actually take cash, and so on, so that your chances of having spent things otherwise than by the card is going to be quite limited. And so that sort of analysis could work for the tax authorities, could also work for tax advisors, by the way. I mean, at the moment, particularly for advisors to smaller businesses, what tends to happen is your client rocks up and hands over several plastic bags, depending on the size of the business, one plastic bag or more, full of receipts, and says, there you are. And you've got to go through, work out what they've actually spent, whether or not it's deductible, etc. and so on. Whereas actually, if you could say, no, could you just send me your tax, give me advisor access to your bank account. Doesn't exist yet as far as I know, but I'm sure it will do shortly. And we can do, basically that advisor will then have their own piece of software that will do the analysis. And I suspect that may come before the government can do that in that sense. It probably already exists to a large extent. And there's certainly plenty of software that integrates receipts with accounts and does a rudimentary form of analysis on it. I mean, when I was in practice as a barrister, I actually used exactly that, something where I just had to take a photograph of a receipt or send the email that was confirming something I had paid for to a particular address. It would turn up in my accounting software together with we think this is this, and would deal with the tax deductibility of it depending on how it had analysed it. It's about 97% accurate. I mean, admittedly, barristers don't have particularly exotic expenditure, or at least most don't. It's pretty much travel, a bit more travel, chambers, rent, and telephones, and suits. But anyway, so it's that sort of element where there's, besides the whole how does tax respond to automation in terms of raising funds, there's also how does tax respond to automation in the context of the interaction of the individual with the state in declaring their taxes, in calculating their taxes. For governments, they are very keen on this because it is seen as being a quick and easy way, well, an easy way, I don't know about quick, of getting closer to an accurate tax take, reducing it certainly has considerable opportunity for reducing error and mistake. I don't think any automation is going to eliminate fraud in the way that it could just about eliminate mistakes, maybe. But it does stand a possibility of being used to determine whether or not fraud is taking place at a much earlier stage than has perhaps historically been the case for most tax authorities. So it's one of these, in so many areas, you've got the dichotomy of government chasing automation on one side going, automation is fabulous, we want more of this. And then on the other side, just looking at it with a sinking heart, waiting for the tax take to start to drop. Not for the first time, but as I say, I think the big distinction this time is the speed at which we're getting this particular industrial revolution coming in. It is a lot faster than the 3 previous ones, and we've not really had any breathing room from the implications of the third industrial revolution in that context. At which point, I've been talking for about an hour. I've had one question which I'm hoping I've answered, which was how do tax advisors adapt to the automation process, to which the short answer is buy software, be aware of what the government is actually doing in this sort of context, and in terms of how you react to automation in the wider world, that for advisors I think is going to be a question of waiting to see how governments react, because it's not guaranteed that it will be by way of taxes in this context. Separately, of picking up on both these sort of areas, one thing that's worth reading is the EU proposal on rules relating to robotics, and a bit on the Bill Gates side, there was an EU. This was a very early stage proposal. It has never got anywhere near being EU legislation or even policy, suggesting that robots ought to be granted personhood. They should be treated as individuals. We're getting very firmly into Isaac Asimov's iRobot territory, but it was suggested as one of those that, you treat a robot, and this would be robots rather than disembodied AI and software, as if they are a human being, and therefore you could tax the human being. It was actually the EU proposals and the EU discussion was more about liability and who is liable for the actions of a robot and things like that. It's very, very Isaac Asimov's 3 laws of robotics. But one of the aspects of it was, well, you could require it to be paid. So where they think the money is going to go, this sort of never-ending building pot of money that is held on behalf of robots, and then tax that. So it makes for some interesting reading. It was incredibly blue sky, one of these sort of random papers that from time to time crops up at the EU, and you just think, wow, what were you people thinking? But it makes for interesting reading. Right. Any questions?
So 2 full questions. First, I would like to understand your thought process on whether would you categorize e-commerce and automation as one bucket, or would you consider them as 2 different aspects? And if you consider them as one particular bucket as a concept when it comes to, so in my opinion, I feel that when we talk about e-commerce or automation and the taxes which involve from there on, contribute further on at this very age, as you clearly spoke about the rapid increase in the transfer of these developments.
Yep.
With e-commerce also booming in its own aspect, in its own way, has led to a lot of increase in this. What would you feel about this? And another one for following up with this is there are when we just specifically consider automation in different fields. Yes, I totally understand when you say, and agree with you when you say that yes, when we have these automations coming in various different fields, also eradicate the opportunities for various humans to come and contribute in that particular field and lose jobs and export the other consequences from there on. But there are certain fields wherein in the recent times, and I recently come across this article wherein medical electronics and the automation which has been led on from there has in fact resulted to a better volume than it was before. So what is your take on both of these?
Starting with the e-commerce and automation, I think e-commerce is something that's born out of automation. It is one of these where actually the 3rd and 4th industrial revolutions, there are some academics who question whether that's actually there's a distinction between them, because e-commerce was born on the basis of the internet. Essentially, it exists purely and simply because of the communications that exist through the internet. And yes, if you look at how things have grown, Amazon, if you wish to go, if you're signed up to Amazon and you go and look at your account page, it'll tell you how long you've been an Amazon customer. Turns out I've been an Amazon UK customer basically since they started in the mid-90s. But when they started in the mid-90s, they sold books and pretty much nothing else. And they are a classic example of how the whole thing has changed, in the sense that Amazon themselves, yes, they sell things, but actually what they sell is a marketplace, allowing other people to do exactly that. And they're not just selling things that they're making at home. They've got the drop shippers who are basically outsourcing delivery and fulfillment to places like China, etc., and so on. But that's all born off the back of the technology, which is a form of the. So I think e-commerce is a result of automation. It is not something separate to it. It wouldn't exist without the internet. And the internet is, I think, the big driver of a lot of this. Automation then has a wider aspect of things like the artificial intelligence, which can use the internet in delivering results and things and so on, but is, I think, a separate piece of software, if you like. The other thing with the internet is it also is one of the things that's enabled the speed, because prior to that sort of instant communication and the increases, the ability to deal with that increase, things like research and development tended to happen in a much slower way. Now you've got businesses that will do development 24 hours a day, because they actually hand off R&D from one development center to another around the globe. And you can only do that when you can massively data dump from one place to another in very quick succession. I mean, yes, I talked about the fact that I've had Amazon account since they pretty much started in the UK, which I think was about 90. I'm trying to remember now whether it's 96 or 98 on my account, but anyway, either of those. At that point in time, my home internet access was probably something like 24 to 48 kilobits per second. My home internet access now is a 1 gigabit per second, and you can certainly get faster. I just can't be bothered to pay for anything more, because there's a limit to how much we need to download at any given point in time. That's domestic. If you extrapolate that across business, and at the point at which my dial-up access at home was 24 to 48, so was most businesses. Most businesses now will have faster internet. Many businesses, not most necessarily, will have faster internet access than I do. So, and that's the thing that's changed the e-commerce side of it, but it goes well beyond that. In terms of the sort of medical side, yes, there's much more that can be done. That's one of the points, one of the benefits of the automation will be things like the fact that surgery that is quite difficult to do now, because it requires a single human being with very, very specialist abilities, can be then replicated by as many robots as you can build, or pieces of equipment as you can build, not necessarily full-on robots, each of which can do exactly the same thing. And you've also got then machines that can deal with the anesthetics that are needed to make sure the human being can actually be operated on without screaming, and things like that. And so yes, there's huge benefit there. That's, I think, one of the problems now is that point that you can point to automation and say, this is going to make life considerably better for a heck of a lot of people, but actually at the same time it's going to make life quite difficult for them if they can't afford food and shelter, because their work has been displaced by automation. And that's where the government needs to I think governments have to be involved. I don't think, purely personally, I don't think it's something you can leave to the free market.
Just one last. So, as rightly spoken about the intangible value in say probably AI or intellectual property or any of these which has an intangible value to it. So do you, in your opinion, feel that with the increase in automation, the intangible value is being reduced now, where you can quantify these things?
I'm not aware that anybody's really fully got to grips with how you value intangibles. I think it'll be a big question as to whether they ever will. What might change is the question of whether you need to value the intangibles. That's where we start getting into how do you deal with this from an economic perspective. If you're going to address any potential labour or income issues for labour that arise from automation, and you're going to do it by way of tax, then yes, you probably are going to have to figure out a way of reliably valuing intangibles. And I don't think we're there yet. At least if we are, nobody's told me about it, and I haven't seen any academic studies that suggest that we're there yet. But there are other options that don't necessarily involve tax, where you're going into the Star Trek-y thing of going into a post-war society and having the collective providing for everybody within it. Then at that point, it doesn't really matter what things are worth. If you don't necessarily need to value something if you are not seeking to tax it, or in that sort of context. I mean, there might be a question whether you want to sell it and people want to buy it, at which point then there's value questions, but value questions are always going to arise in that sense. Do I think we will ever solve the problem of valuing tangibles? No. Maybe not in the next, I don't think in the next 100 years anyway, because there'll always be the next thing and the next thing, and you're invariably dealing with things for which there is nothing that you can compare it with, and where certainly at an early stage you can't even reliably say what it's actually going to do. You can say, well, it has the potential for this and it has the potential for that, and you could possibly come up with a ballpark figure if it delivers on that potential. But unless and until it does deliver, it's quite difficult to say whether or not something has particular value. And then you can also get into the metaphysics of what is value and how, what do you call value? Why does, to use something potentially controversial at the moment, why does Bitcoin trade at, does Bitcoin have the value at which it trades? Does it have any value at all? Does gold have the value attributed to it? I mean, it's a very nice, pretty yellow material. It's really good at conducting heat. Is its value because it's pretty and shiny, or is its value because it's really good at conducting heat, or electricity can be used for circuitry and electronics and so on, but there are better materials, usually. Some applications where gold is quite useful for that. But it's where and how do you define value? Is it just what the world says something is, or do you need it to have something productive? Using Bill Gates yet again. Somewhere in the last month, I think he actually came out on discussing, I think it was NFTs and Bitcoin generally, and he said effectively he doesn't have any NFTs, doesn't own any Bitcoin, because he prefers to put it, he says he prefers to put his investments into things that he can actually see what they are producing. So, it's all of that. That starts getting into metaphysics, metaphysics anyway, as to what is value and to what extent do you apply one human construct to another in some context. So I'm afraid that this is also one of those areas where there's way more questions than anybody has got any answers to at the moment, in part because we haven't actually really got to the stage where things are starting to get serious. There is you can see some jobs being displaced, but it hasn't yet accelerated quite as much as it will, I think, do. Questions come through in the chat. Seems the taxation process set up by taxpayers is much more advanced compared to technology used by tax authorities. Yes. How long is this? Is almost always the case, by the way. The private sector always seems to get ahead faster than the authorities do. They tend to react. How long tax authorities would take to enhance technology? It's all a question of spending priorities. I mean, they could enhance things very quickly, but you've got governments around the world, certainly right now, dealing with the fallout of the pandemic, dealing with the issues that are arising from war in Ukraine, etc. It's one of those where they could do it quite quickly. I doubt very much whether any government is going to do this, particularly in sort of more westernized democracies are unlikely to be spending significant amounts of money on enhancing the tax technology at the moment.
It's interesting, isn't it, too, because the tax authorities, when tax regimes get more and more complicated, it actually becomes harder and harder to get the tech to make things safer and more visible.
Yeah, I mean, it's an invariable problem is that we're still at the point where the AI can't write itself. And so you need human beings to understand what the tax laws actually mean to be able to write any technology to be able to assess whether or not somebody has complied with those laws.
And actually, in that context, it's quite interesting because Brazil is one of those countries that's headlined as being a country that's developed the tech to deal with the new tax system that it's introduced. And I know it's changing its tax system to go with the OECD transfer pricing guidelines at the moment, which is causing it some problems.
Well, it will be, yes.
Very interesting to see a country that could have a simple tax system developing it based on the technology and studying it. The other thing that's always I found interesting in this discussion of where you get tax from is the question of whether we should now start taxing wealth, rather than having inheritance tax that everybody can escape, and actually having a tax authority that asks individuals what assets do they own, as opposed to what income do they have, to give them a starting point to really try and think about how they could tax individuals better.
But you still then, it's always that, yes, you've got to have the information, and it comes back to the value point, and how do you value some of that? I mean, we've just about got to grips.
You could put onto one side. But just get people to report that they've got a
well, yes, just reporting,
here,
yes,
whatever else. It would,
I mean, real estate, in theory, the government has that information from the land registry, but no, it's in theory.
but
It doesn't join it together. It doesn't join together the information about it from companies' houses to share ownership, for example, etc. So yes, there is a lot there that could be done, and it may well be that at some point in the future, wealth tax becomes something more than it is at the moment. I mean, France seems to be stepping back from its wealth taxation, even finding it's just not working as well as they wanted to. So questionable how well that was working. The Brazilian thing of software and tax law together. In theory, tax law should be a if this then that. It should be theoretically capable of being reduced into a computer program really easily. The problem comes when you get if it's reasonable to do this, or if it is just unreasonable, which is another term that gets used. It's that fuzzy bit around the edges about, okay, well, we'll tax that, because the problem is the minute you do an if this then that, you end up with the potential for outliers that just don't work, and people who get caught by things that it's not supposed to catch. Classic, I think, from the UK perspective in the last, I can't remember when the case was, the Lobler case, which was around the unintended consequences of a particular action, and where if you strictly followed the tax rules, it led to a result that even the judge who wrote that decision didn't like having to come to that result. If you read the decision, the closing paragraphs are pretty much, I do not really like this. I do not like having to give this answer. This is not the correct answer. It's the correct answer in law, but it's not the correct answer. It actually took, I think it was a Court of Appeal, to wiggle their way around it in effect, and come up with the idea of, well, actually, if they really didn't intend this, then they didn't intend the contract either, and unwound it that way. So yeah, in theory, yes, but the problem also, and I'd be interested to see how the Brazilian system develops, never mind the fact that it's going to have to introduce some fuzzy stuff to deal with transfer pricing, because transfer pricing is nothing if not fuzzy. The question that always arises is, if you try and make it simple, does it make it easier to avoid? Never mind evasion, flat out. People are always going to evade is the illegal. There are always going to be a very small subset of the world that thinks that tax applies to somebody else and not to them, rather than those who think they should just perhaps could possibly, if they just do this, then it's still within the law and so on. Not going to get into morality of either of those, not really part of this, but it's that problem. The simpler things are, in some ways, sometimes the easier they are to sidestep, unless, and this is where automation could come back in, you make it really difficult for people to sidestep because you know too much about them, because you've got all of the information. And then you get into the big data stuff, and do you really want the government knowing all that much about you? And how does that all work, and privacy and everything else? And we then start getting into discussions that go way beyond tax, but are still important.
And that leads full circle, Anne, doesn't it? To saying we will still need judges.
Yeah, we're not. And I think, I think definitely need academics, because frankly, the idea of AI doing original thinking, I mean, yes, I suppose the idea of AI is it's supposed to eventually be able to do original thinking if it becomes sentient, etc. I think that's quite a long way off. And there's always going to be this whole exploration of humanity. And by humanity, I include technology. Yeah, but, and there's also the question of what happens when it all breaks down. If you've got the notes being circulated that I sent through, yeah, there's a reading list on there. I'd highly recommend reading the 2 novels that I've put on. Yes, I know it's a reading list, and yes, there are plenty of academic things to read, but Kurt Vonnegut's Play a Piano and E.M. Forster's Machine Stops are both really good discussions about technology and the use of technology and its interaction with humanity. So, and yeah, I'll be interested to see whether when AI can produce a novel that I actually want to read. Right, I think that may be it for the questions.
Okay, well, in that case, thank you again, Anne. It's been a real pleasure to have you here. I hope you found this discussion very interesting. I certainly have. And wish you a good rest of the day. Thank you.
Yeah, go enjoy the sunshine.
Thank you. Indeed.
Thank you.